this one, I know this is the one. Like, alphabet boys fit my P's and Q's, yeah. Hold up, couldn't see me playing peekaboo, yeah. Do it all, yeah, y'all just seasonal, yeah. This the type of bag that's unbelievable, unbelievable. This what freedom do. Heard you pull up on the kid, I'm on the avenue. Doing everything my teacher said I cannot do. I've been waiting on the job, I think it's overdue. Good morning, family. Yeah. I was on mute. So what? So what? What up, yo? What up? I was trying to get the link here. We're trying to get the link for Jackson. Oh, good morning. How you feeling? How you feeling? How you feeling, baby? Good morning. Okay. I have a question for the speaker. Yes. What's our question, family? Anyone has a question for the speaker? Fed chairman. Oh, I think I got a good one. Yeah, I think Powell sends you the tickets to ET. If you ask him that question. Let's see. Okay. Let's see if we get the link. Let's see. Federal Fed Annual Summit Retreat, Jackson Hole. I guess okay.
Jackson Hole. Good morning. Good morning. How you feeling? Good morning. Beautiful Friday. Good morning. Good morning. Good morning. Good morning. If you're just coming in, we're trying to set this up for Jackson Hole. Okay, getting some movement out of Meta. Meta's coming up here. SPX, you have 41.97. Snow is still rocketing. Oh my. Now not really doing anything. There you go. Moderna suing Pfizer saying they stole their vaccine. What? Huh? What is this? This is one of those Apple versus Android salts. LRCX 475, shop 33. Let's get a cross asset check here. Where's First Solar at? We got financials leading the way. So banks is up. Communications, utility, industrial, consumer discretionary. And then we have healthcare, materials, technology, real estate, and energy at the bottom. So let's look at HUSA. HUSA still holding at 4.5. Wow. 5.5 was that high. XLE. Where's First Solar? 123. Wow. 126. Hold on. First Solar. Let's see. Okay. Okay, I'm reloaded.
Yo, First Solar though, man. First Solar looked like it broke some highs.
125.
Snow is so close to that 200 level too. Above 200, snow could really break out.
It's
Two,
close.
220, 250.
Look at MDB. Oh my, they close. Where's now? Now it's still not still lagging. Oh my. Sheesh. First solo running. Oh my. That was quick.
Yeah, First Solar get those pre-market highs. Take out that 126. I think you said it too. It was like 130 for September.
This is why looking at previous highs sometimes we can't really stick to that, right, bro? Because like think about it. To cap at that high, right? If we was playing basketball and that was like the biggest dunk, right? But let's say it took a different player. It didn't come from me and you. We would need that same player to do that same dunk again, take that same how we don't have that same situation going, right? We obviously have an energy crunch here. Biden's passing all the inflation acts, right? Anything has to do with climate, anything has to do with the climate right now, anything that can buy your vote right now, where that's the type of things we're experiencing. How that jumped to 85 cents when you threw the play out, yeah, it flew. It flew quick. It flew quick. I'm up 38%. But this is where it's like, from the time I'm in the play to when I'm writing it, see what I'm saying? It's like that's that you have a window. Like never pay more than what we pay. Oh man, oh my. Saying oh my to the fact that all these new truths to old stock market is like hilarious. It's funny. All these new names, all these new acronyms to define someone's theory is just funny. You just need to be present and carefree. Like literally, Snow can rip 20 from him. If now starts to follow, can rip 20 as well. NVIDIA coming down. We got technology communication. Said GS should be interesting. Bitcoin up, British pound yen is up. Natural gas, real strong. How strong? Real strong. Energy
So you see
starting.
snow is breaking out here. It's breaking some of these highs. So snow is on watch right now.
First Solar taking a cooler here. Starting to cool down. Your market movers. 200 names up, 210 names up, 287 names down in the S&P 500. On the NASDAQ, we have 38 names up and 64 names down. We got Workday, Datadog, Tesla, Netflix up, Airbnb, eBay, Biogen, Amgen, Facebook. And then we have more names down like NVIDIA, Google, MU, Doc, LRCX, chips are down. AMAT, Adobe, Moderna. First Solar right back up, so gave a little opportunity. The premiums went back down to like 10%. Now they back up 40% up on First Solar. Yeet. Let's see. First Solar.
And you know, this is also why we say watch premiums, right? Because sometimes we'll call out a play, you know, 0.5, and before you know it, it's 0.8, right? And there's nothing we can do about that. I mean, that's just how the market works, right? It's not going to wait for you to be like, okay, are you ready to enter at that price? So we have to understand that a lot of times premiums can move in a range, just like how the stock is moving in a range, right? So if you're able to identify the range that the premiums are moving in, you can say, okay, well, it looks like the premiums are on the higher end of the range right now. So let me wait to see if there's a pullback, right? And then you identify, okay, where's the lower part of that range to where, you know, I could have the least amount of risk, right? If the contract was trading at 0.80, $1.20, and now it's back at 0.5, 0.4, well, I mean, that's going to be more of the entry that I'm looking for, right? Versus when the play is already at 0.8, 0.9, now that's just kind of forcing the trade. We already missed the move, right? You want to just watch the premiums, kind of get a feel of, okay, this is kind of the range that is trading in today. And then you want to look at the rest of the market, right? Because you don't want to just, you know, keep yourself focused on that one kind of premium. You want to watch what the rest of the market is doing too, right? Because if the rest of the market starts to move out of that range, well, there's a good chance that whatever you're looking at could also move out of that range, right? So just want to keep an open mind and be analyzing everything. And then, right, exactly, like Troy said. Right, exactly. So if I see something and it got called at 0.60 and it's at 0.90 now, I'm going to put in a buy order for 0.6 as well, right? See if it comes back down to my price that I like.
You know, we put out the layers, and even if you followed on the layers, they're up. It was up on that pop. Oxy still going. So both the September 2nd, 128 call on First Solar, and this week 125 call on First Solar, they're both up. You still got time on the 128. Oh, let me get the link here. I knew something was missing. Ain't no love in the stock market. Market maker, where's the love? Ain't no love in the option chain. Not feeling me, where's the love? He said, first the fat boys break up. Now every day I wake up, somebody got a problem with stock. What's up? Y'all traders all fed up because I got a little cheddar and plays moving out the stock. We got young Furu spitting at me. Young traders getting at me. My nigga Mark predicted this exactly. More trades, more losses. You got to move carefully. Ooh, no. What's 75? Goldman Sachs still holding. SPX 4189. First Solar still holding. Live Series. Jackson Hole. Prior to session. Custom. The requirement. Link. That's the link. Do we link right there? Okay. That's it right there. Wow. Okay. I guess it goes on when it goes on. 124. Oh. 20. Like, honestly, you got to think about it, what's about to happen, right? Literally, like, Powell's on the other team right now. And, like, he's, like, we're going against LeBron, Melo, LaMelo, you know what I'm saying? Like, then they're putting on their gear, right? You on the other side of the court. You realize that. And, like, we got to figure out if, like, Powell's trying to pass it or not. Like, literally, like, just don't get fooled out there, right? And don't get hit with a pump fake, or a fake pass with, because literally we're on a fast break right now. Okay, yeah. We're on a fast break right now, right? Aki just checked the ball in, and it's like, just don't force a trade. You don't want to get ahead of yourself and then get caught out there. And Powell kind of gives you that head fake, and this is where you're already off to a forced start, because that will be terrible defense. You see what I'm saying? So this is where your defense is going to make your offense, and this is what I've been standing on for the last couple months so far. Where's the dollar? Well, my neighbor just love to cut his grass at the wrong time. Ooh. Let's go, Snow. Oh, my. For Solar, almost 100%. If you follow, made money, congratulations. Remain nimble. Goldman Sachs coming up here. Let's get a cross asset check. It looks like a lot of things are starting to pick up some steam here. Okay, yes, we have energy. Energy went from the bottom all the way to the top. So energy is leading now. So if anything, we caught the very bottom on First Solar Underneath, you have financials, utilities, consumer discretionary starting to make a move, industrials and material. And now on the bottom, we have communications, consumer staples, technology, and real estate. So very interesting setup going into Jackson Hole. In a couple minutes, we will hear from Jerome Jerome in the house. Watch your mouth. Give me a second, y'all. Let's get this guy up here.
Great lately does have growth prospects in the women's, so they have a couple of chains that have value. Now, you mentioned Banana Republic. Banana Republic has been troubled for a long time, but recently it has posted better results, just as the fashion trends have changed. They're trying to make Banana Republic into more of an upscale luxury type brand. And, that kind of stuff has been selling well. We've seen a big disconnect right now between lower income consumers and higher income consumers. And the higher income consumers are continuing to spend pretty well.
And
so,
there goes
I
Snow.
think that benefits Banana Republic. The Gap brand itself is troubled. They're really betting on this Yeezy partnership, which a lot of people don't really think will go
I'm
anywhere.
stalking the
But we'll see what
220s for
happens.
next week.
Okay, David, great stuff. Appreciate
Snow.
the details. Fascinating look here. Let's do some trading now. I got Tom with me here in studio. Thanks, David Swartz. Okay, so with that said, Tom, you've got a bullish trading gap to follow on with David's view that ultimately it still is too cheap.
Yeah, I think if you look at it as $10 stock, right, it's really inexpensive if you want to just buy the shares, collect that 15-cent dividend on a quarterly basis with the
220s aren't bad.
It's one way to do it. I looked at
right, if Snow
using
explodes
the
another
option
$10,
market as a little
$20,
bit
those
more
go 1 at
leverage
5,
where you're
1 at
not
6.
outlaying as much capital, right? It's a cheap stock, but you can find cheap ways to play it to the upside if you think it's going to rebound. I think the key maybe to the thesis here is, do you wait through holiday shopping season?
Was breaking out
I looked at a
huge,
strategy
though.
that takes advantage
Last
of that.
time it was above
see if sales
200
pick
was
up. Going out to the January monthly
was
cycle,
this?
so giving
April?
myself about 147
the
days.
Christmas trade.
Christmas trade, exactly.
Okay.
Buying an in the
That's
money
cheery
call.
of you, Tom.
Yeah, buying in the money call. It's got a higher delta, about 67 delta on this, so it's going to react more like the stock. There's not a lot of extrinsic value in the option, so you're not paying a big option premium. If you pay basically about $2.20 debit for those 9 strike calls out in January, your break even is going to be $11.20 over the next 100.
January monthly cycle and Christmas trade would be great. It'll be a higher delta above 67, and there's not a lot of extrinsic value. And you're not really paying a big premium, so the break even is going to be above 11.20.
I'd never trade Gap if you paid me to. Snow.
Snow is gone.
It's snowing.
The 220s for next week are what, 1.4 now? Let's see if they can take them back to like 1.2. Okay, nice little pullback here.
We got to start looking at SPX. Start put some strikes in the chat. What you like for SPX?
$42.50, okay. Yeah, and only 30 minutes in. Still waiting on a lot today, so. Let's see. Happy Friday, though, again, everyone. Let's see. Snow right back below 200.
Let's see. 4230s, 4250s, 4280 up, 4150 down. Let's talk, family. Let's get it. Let's get it. Let's get it. Okay. Put it in the chat. Put your strikes in the chat. SPX up, SPX down. Okay.
Oh, there's Powell.
There we go.
Let's see what he
While
says,
higher
man.
interest rates, slower growth, and softer labor market
Look, watch
conditions will bring
SPX
down
right there,
inflation,
too.
they will also
Watch
bring some
SPX.
pain to households and businesses.
We got
These are the unfortunate
4150
costs
puts
of reducing inflation.
and 4250 puts for.
But a failure to restore price
4250
stability
calls
would
for
mean
Monday.
far greater pain.
Watch them. Keep on
The
the
U.S.
watch.
economy is clearly slowing from the historically high growth rates of 2021, which reflected the reopening of the economy following the pandemic recession. While the latest economic data have been mixed, in my view, our economy continues to show strong underlying momentum. The labor market is particularly strong, but it is clearly out of balance, with demand for workers substantially exceeding the supply of available workers. Inflation is running well above 2%, and high inflation has continued to spread through the economy. While the lower inflation readings for July are certainly welcome, a single month's improvement falls far short of what the committee will need to see before we are confident that inflation is moving down. So, we are moving our policy stance purposefully to a level that will be sufficiently restrictive to return inflation to 2%. At our most recent meeting in July, the FOMC raised the target range for the federal funds rate to 2.25% to 2.5%, which is in the summary of economic projections range of estimates of where the federal funds rate is projected to settle in the longer run. In current circumstances, with inflation running far above 2% and the labor market extremely tight, estimates of longer run neutral are not a place to pause or stop. July's increase in the target range was the second 75 basis point increase in as many meetings, and I said then that another unusually large increase could be appropriate at our next meeting. We are now about halfway through the intermeeting period. Our decision at the September meeting will depend on the totality of the incoming data and the evolving outlook. At some point, as the stance of monetary policy tightens further, it likely will become appropriate to slow the pace of increases. Restoring price stability will likely require maintaining a restrictive policy stance for some time. The historical record cautions strongly against prematurely loosening policy. Committee participants' most recent individual projections from the June SEP showed the median federal funds rate running slightly below 4% through the end of 2023. Participants will update their projections at the September meeting. Our monetary policy deliberations and decisions build on what we've learned about inflation dynamics, both from the high and volatile inflation of the 1970s and 1980s, and from the low and stable inflation of the last quarter century.
Look at chat.
And in
Everyone
particular,
look at
we're
the
drawing
chat.
on three important lessons that I'll highlight. The first lesson is that central banks can and should take responsibility for delivering low and stable inflation. It may seem strange now that central bankers and others once needed convincing on these two fronts. But as former Chairman Ben Bernanke has shown, both propositions were widely questioned during the Great Inflation period. Today, we regard these questions as settled. Our responsibility to deliver price stability is unconditional. It is true that the current high inflation is a global phenomenon, and that many economies around the world face inflation as high or higher than seen here in the United States. It's also true, in my view, that the current high inflation in the United States is the product of strong demand and constrained supply, and that the Fed's tools work principally on aggregate demand. None of this diminishes the Federal Reserve's responsibility to carry out our assigned task of achieving price stability. There is clearly a job to do in moderating demand to better align with supply. We are committed to doing that job. The second lesson is that the public's expectations about future inflation can play an important role in setting the path of inflation over time. Today, by many measures, longer-term inflation expectations appear to remain well anchored. That is broadly true of surveys of households, businesses, and forecasters, and of market-based measures as well. But that is not grounds for complacency, with inflation having run well above our goal for some time. If the public expects that inflation will remain low and stable over time, then, absent major shocks, it likely will. Unfortunately, the same is true of expectations of high and volatile inflation. During the 1970s, as inflation climbed, the anticipation of high inflation became entrenched in the economic decision-making of businesses and households. The more inflation rose, the more people came to expect it to remain high, and they built that belief into wage and price decisions. As former Chairman Paul Volcker put it at the height of the Great Inflation in 1979, inflation feeds in part on itself, so part of the job of returning to a more stable and more productive economy must be to break the grip of inflationary expectations. One useful insight into how actual inflation may affect expectations about its future path is based in the concept of rational inattention. When inflation is persistently high, households and businesses must pay close attention and incorporate inflation into their economic decisions. When inflation is low and stable, they are freer to focus their attention elsewhere. Former Chairman Alan Greenspan put it this way: for all practical purposes, price stability means that expected changes in the average price level are small enough and gradual enough that they do not materially enter business and household financial decisions. Of course, inflation has just about everyone's attention right now, which highlights a particular risk today. The longer the current bout of high inflation continues, the greater the chance that expectations of higher inflation will become entrenched. And that brings me to the third lesson, which is that we must keep at it until the job is done. History shows that the employment costs of bringing down inflation are likely to increase with delay, as high inflation becomes more entrenched in wage and price setting. The successful Volcker disinflation of the early 1980s followed multiple failed attempts to lower inflation over the previous 15 years. A lengthy period of very restrictive monetary policy was ultimately needed to stem high inflation and to start the process of getting inflation down to the low and stable levels that were the norm until the spring of last year. Our aim is to avoid that outcome by acting with resolve now. So, these lessons are guiding us as we use our tools to bring inflation down. We are taking forceful and rapid steps to moderate demand so that it comes into better alignment with supply and to keep inflation expectations anchored. We will keep at it until we're confident the job is done. Thank you.
Stocks are down after hearing from Fed Chair Jerome Powell there on monetary policy and price stability in his speech titled.
So that's what we got from Powell. Again, we said the 42.30s, 42.20s, 42.50s. On the way up will be the move on SPX. We have First Solar. First Solar is currently in the money at 125. We also have 128 for next week. And it's a good reaction there. It's a very good reaction there. First Solar. Where's Tesla at? No. Continuing to go. Dollar is taking another leg down. Huge whiplash on the ES. Huge. To an end phase at 301. Baba's at 102. Okay. Tesla. Tesla. Okay. $42.20, $42.30, and $42.50. Tesla. I see you, Tesla. Tesla's so close. Huge. The 42, I'm like, what's happening right now? I'm trying to see what's a possible. The 42.50s, they're pricing them in at what, 2.6, 2.5. Okay. First solar, money. Okay. Okay. Da, 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 da. I need now to fly. Let's see what we got from it. To the headlines. We're still gonna get we got Dan, we're gonna get Citigroup, and then Loretta Mesta comes in at 11:30. Okay. Yeah, but if you heard Powell and what he was saying, you know, if you didn't get to listen in, but he literally said we're watching clearly slowing from the historical high growth rates, right, of 2021, and that's reflected in the reopening of the economy. Like, and then we seen the market react to that, right? But then keep in mind, he said now he's saying that the labor market is particularly strong, but he's saying that it's there's a balance of demand of workers exceeding supply available for workers. And he's saying inflation is running well above 2%, which we all know this, right? And this is where it's like he's standing on that 2.2%, 2.5%, and this is why it's like somewhat bullish in a way, even though you're seeing the SPX react and you're seeing the whiplash, right? It was a very dovish stance. So he said July's increased target range was 75 basis point increase. And as in many meetings, he said that another usually large increase would be appropriate. And he said that this September meeting will depend on the totality of incoming data and the evolving outlook. So if the Fed is data dependent, and they're even saying, well, history is one thing, every moment from here on now is unique, we need to do the same. Oh my, Tesla. First solar in the money. Snow in the money. Tesla next. It's snowing, it's snowing. It's snowing. To all my baby mamas, mamas, baby mamas. I'm like, I'm sorry, Mr. Snowman. Oh my. 176 Nvidia SPX holding like it wants to take
Oh
off.
my, those 220s on snow, if you followed.
Flying.
Woo-hoo.
Okay, said bond yields pivot higher Friday as Federal Reserve Chairman Powell delivered hawkish comments on the central bank to fight and bring down inflation, saying the data showed the central bank preferred inflation gauge ease last month. So what's driving the market? They're saying Fed Powell and blunt remarks at Jackson Hole saying bringing down inflation will cause pain to households and businesses. In addition, he said that the Fed will be using its tools forcefully. Interesting. Which will likely lead to a softening of the labor market conditions, and another usually large rate hike may be appropriate, but a failure to restore price stability would involve great pain, according to Jerome Powell. So that's what they're saying. If you followed on Snow, congratulations. If you followed on First Solo, congratulations. And Tesla, congratulations. If you like it, you can take it here. We're going to see what it does for the rest of the day. Never meant to make your portfolio die. I apologize a trillion times. Ooh, I am for real. Never meant to make your market make it cry. Tesla coming back down for solar. SPX starting to come back down now. We're starting to get some headlines. And then what we got in the bond market as well. So ZB is coming down and the yields are starting to come up. So we're getting that divergence. As you can see, candle down, candle green. Like we're getting that divergence. One goes up, other one comes down.
Man, this is why we got to sell into strength too, right? Because a lot of times you see that snow pop right there to 205. Like it took those 220 premiums and it moved them, right? But as soon as the stock slows down, it comes back down. The premiums start to also kind of get weaker. So, you know, a lot of times it's hard to sell into strength, right? Because you see the stock ticking up, and then in your head, naturally, you know, you start to tell yourself, okay, it looks like it's going to go higher. It looks like, you know, maybe I'll just wait and get a little more, right? And then what ultimately happens, it starts to tick back down. And instead of selling on our own terms now you feel forced to sell. Okay, wow, it's starting to go down. I feel like I have to sell now, versus when you just sell into strength, you know, you'll start to realize, okay, you know, that extra 10, 15% is going to also compound if you just learn to kind of fight that, you know, devil's advocate, or fight that voice in your head that's saying, oh yeah, it looks like it could go higher. It looks like it could give us more when it's already given you so much. You know, that little pop from 199, even 200 at 205 on the next week's gave Snow 50, 60%. You know, we were calling them at 1.5, 1.4, where they just went to like 220. So it's like, what more can you really ask, and what more can you really get from it? You know, if it's giving you 50, 60% in 20 minutes, I don't have to swing it until next week and see how much more it could give me. You know, that's like, you don't, and that's the thing when people say, oh, I don't day trade. I need to look for a swing trade. Well, what's the difference, right? If you buy a swing trade and you're up 100% in the first hour or two, why do you need to swing it? What are you possibly waiting for, right? Like, and then look, Snow's coming back down a little now, and we want to see if it pops again. But, you know, that's just a perfect example of why selling into strength works, right? Sometimes you sell and then it goes next leg up. Well, that's fine too, because that'll happen. Right? Same thing with FSLR, right? Selling into strength, right? We were able to take quick, easy 20, 30%. Right, John. Let's go.
Never meant to make your portfolio die. I apologize a trillion times. Ooh. Baby mamas, 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 mamas. Gotta take profits. It's not a matter if you're wrong or right, because you don't know when the trade is. In reality, you're telling your brain that it's more, so you're changing your expectations. Your expectations are going from you actually receiving something. If I put $1 in your hand, you may not take it. Your expectations is that nothing is free. Interesting. And even if I put $1 in your hand and someone immediately following after said, "Oh, it should have been $2," your expectations has changed immediately. Now you went from feeling happy to feeling sad. That moment where you see 50% and you're saying it can go more, that moment could get taken out like this in seconds, as quick as pulling the trigger on a weapon, that fast. Don't become too euphoric. Then you become dangerous. 10-year yield shooting, bonds going down, equities is following. Currently, we're getting digestion in the market. Market's not liking it. The bonds is leading the way. S&P, the 4150s. Let's see. Yep. Y'all seeing it live. Look at the dollar. I'm gonna put the dollar up here. I'll put First Solar down here. So we have SPX. You have the dollar, the 10-year yield, and then the bonds. All right here. And then we're watching First Solar, and then Snow had to move after earnings, right? So as far as what we're getting total market breadth here, we have all sectors are red. So energy, utilities, financials, consumer staples, healthcare, communications, everything flipped red.
To keep in mind. And then the second thing is that, a lot of opportunities right now that we think are already discounting an excessively bearish outlook. So obviously a lot of discussion about a possible recession. The question is, can the Fed engineer a so-called soft landing, or, do they have to put the economy into some measure of recession to tame inflation? So that's the backdrop. And we think there are a number of stocks that are already discounting that outcome and then some, and frankly are just too bearish. So we're starting to see a number of those opportunities. And so I would say, the language today from the
So we just broke 4150. Dollar and yields are coming up. We're getting a digestion here. Let's see where the Fed futures are at.
A perfect sell on Snow, and we can even re-enter now for cheaper, right?
Interesting. Put a 1 in the chat if you can see my screen. And if you are familiar with what you're looking at, what's your interpretation? If you're familiar with what you're looking at, what's the interpretation? Quiz time. What just happened in the Fed futures? Right. Very good. Very good, Camille. It's even more uncertainty. And Powell said that to tame inflation, it can lead some households into pain. And this is where the market went from, yeah, all right, to yo, listen. Yo, listen. Man, listen up. Flip a coin, John. Right. So this is where now we want to be able to look ahead. What do you mean? Yeah, we want to look ahead. We want to be able to say, okay, well, if that's happening, then okay. So now we want to be able to see, okay, how we close today, how we open Monday, right? Because how we started this week, down Friday, down Monday. Do we have that for 2 weeks in a row? Right. So let's see. We came down underneath 4150. Currently at 4143, and the SPX can set up a crazy lotto day. Crazy lotto. Anything under 4100 is probably super cheap. So we want to remain nimble. We're seeing the market reprice it live. Like this was just 20 minutes ago. So I think it updates every hour. So we'll see it by 11 to see where it's at. But we're definitely getting a reaction. Definitely getting reaction of VIX index. You're getting reaction on the dollar index and also on the 10-year yield and the bond market. Thank you. Thank you, Inaki, for all. Oh, thank you for showing up, baby. Thank you for coming here, ready to learn, ready to just take it all in. Even though I know it is a lot, we try to make it to where it's like bite size and it's you're able to now take this in and have a regular conversation with with family where they can also take it in. It don't have to be all these big words. You see, this is why sometimes don't think nothing of it. It's just like it doesn't have to be complex. You see what I'm saying? Like it doesn't. It could. This is why we're doing it, and this is why we're here. So you're able to now take this information and make the best financial decision possible. Not only in trading. This is why I'm saying like don't even like limit us to trading. That's a side hustle for us. We're getting this information. We're knowing what to do with it. Whether it's real estate. Maybe it may be a trade. It could be selling a Lamborghini. Whatever it is, we're going to be ahead of it, and we're gonna for the next 10, 20 years, there's gonna be more opportunities like crypto, like Airbnb. There's gonna be so much opportunities from here on that as long as you are objective to the information and not narrowing yourself, you're gonna be good. Trust me. Shout out to you, family. Ba-da-ba-ba-ba. It's freedom, family. Hey.
And the more you understand like these relationships between, the dollar, the bonds, and the overall market, and just in general economic sentiment, you'll start to feel more confident, right, in your analysis when you're looking at the market, when you're looking for plays, right? Because if you don't understand this information, well, It's going to be hard, especially in the state that the current global and economic, economies are in, right? All of this matters, right? What's happening in Europe, what's happening in Asia matters, right? We want to be able to have a clear understanding of, okay, if bonds are going down, dollar's going up, the euro is going down, Asia looks like economy slowing down. What does that mean for the US, right? And we're not understanding this information so we can predict the market, right? Because at the end of the day, all of these top analysts, all these top economists, they understand this information and they're still uncertain. They still don't know what's going to happen, right? We can just tell by looking at the Fed futures, right? There's no way people can predict what's going to happen. But by understanding this information, you're putting yourself in the best position to make the best decision, right? The stock market is all about probabilities, and we know this, right? So how can we increase our probability, right? Some people have indicators that they identify as their trading edge, right? But an indicator is nothing if you don't understand that, it's still random. Your indicator could tell you that there's a chance, the stock is trading above this, this, and this, so this is going to happen. But your indicator is not going to tell you this is the trade where that'll happen. Oh no, this isn't the trade. The next trade will be the one that's going to happen. There's no way your indicator can tell you that, right? So we just want to keep stuff like that in mind, right? Why it's important for us to understand this information and, why we want to know it, not so that we can predict the market, but so that we can make the best decisions, right? So that we can understand, okay, if this is what this is saying, then this is a possibility as to what might happen. So I could put a little bit of money, after defining my risk, to figure out if I'm right or wrong.
And then on top of that, like, we're not really trying to make money here. I know it sounds like, what? Like, we genuinely love business and stocks. Like, and honestly, it's money. We get to do whatever with it reasonably, respectfully. So like when we start, when we get messages, because me and Aki, we get a lot of messages, and it's not too many groups that we don't know of, right? And this is where it's like I want y'all to understand, like, really for real, most forecasts about where the economy is and where the stock market is heading, like, understand, they're terrible. They're terrible. Completely terrible. You see what I'm saying? You got people wanting to short things because they feel interesting. Because how we feel change day to day. Because the RSI, what is that? I didn't look at an RSI. I didn't even think about an RSI until someone brings it up. Interesting. Like, it's hard to wake up in the morning and tell yourself where your future holds. How you want to tell me about the stock market, my G? Am I tripping? Am I tripping? Like, this takes skill, bruh. You gotta be in day and date. You literally, it takes skill. We in here trapping, boy. We in here really getting this information. Like, you tripping. Like, what? And this is where acting on someone else's investment forecast is dangerous if you're not developing your own. If you're not understanding the information to interpret it. And this is where, like, yeah, I get it why people try to predict what will happen next. It's human nature. It's reasonable. But when it comes to understanding how to invest and how to truly be successful in the market, we're talking longevity. It's your behavior. It's your expectations. Surprise. It's not the trade. It's not the charts and it's not the technical. So for next week, let's see, Monday, none from the US. Tuesday, we get composite. Then we get consumer confidence, the jolts. We're going to hear from Williams by 11 a.m. Wednesday, we get Europe CPI. We get Germany unemployment change, Europe CPI. We also hear from Mester, and then we get non-farm payroll. Crude and oil is always on Wednesdays, as you can see. Thursday, unemployment change. We're gonna get manufacturing PMI, some manufacturing data, ISM data, natural gas storage, right? So watch energy. We're gonna get PPI out of Europe and then non-farm payroll. Everyone say, "Oh, I don't trade in non-farm payroll." We trade every event. You know why? Because we learn how to interpret, we learn the outcome, we learn what's new. We take from the history, but then we add from what's new. It's the logic. That's the science behind the trade. It's not the technicals. Dollar back up 108 SPX underneath 41.50, 41.32. It breaks 41.32. You got 41.20, 4100 underneath that 40.90. The 40.80 puts and 40.50 puts could be a supreme lotto if we get another leg down. First solar right back down after hitting highs. You have the bonds starting to come back now. So we're getting yield down, bonds up. So let's see if SPX holds this level. As far as the US sector, what do we got? Any questions, comments, put in the chat. What do we got for the sectors? So we're all red. All red on the S&P. Utilities is least, energies least, but everything is sub one. But energy and utilities, you got consumer staples, sub 1, healthcare 1.1, real estate negative 1.3, industrials 1.4, all the way down to consumer discretionary 1.8, communications 1.8, and technology sub 2%. The VIX index is up 5.1, so you're getting you're definitely getting some fear. So if anything, SPX 4080 puts, 4050 puts, don't think it would get down there, but the 4080 puts definitely look like a play just from that digestion. I'll take today's expiration at 190. Yeah, I'll take them at 190. $2. They're 4080s at $2. That's a Supreme Lotto. It's Friday. Understand, y'all, any play that I'm taking, it's straight profits. Like this week has been a huge week. Right, and this is why we managed on now yesterday. Right, the 475s, the 490s made the 495s free, and this is why you trade peacefully when you risk manage and you define your risk. Right, it's like if I put a $2 back in, am I really losing? Snow went $2 to 12. Edward, for Monday, the 450, the 40, 50, 400s look, the 4,000s look insane. Like, do we go lower? We used to fight for building blocks. Now we fight with blocks with buildings that make a killing. Okay, we're gonna move. Little bounce here. It's gonna be interesting to see how Europe closes. There's Euro power hour right now. Okay. We're holding here. Financial freedom, my only hope. So I bought some artwork for 1 million. 2 years later, it's worth 2 million. The buyers got to do a lot of work to get back up. Even though the bonds coming up in the next 9 minutes, we're gonna get a whole different situation. Okay. I mean, HYG should be coming up as well. Interesting. They're selling HYG down. TLT is coming up. Very interesting setup. Dollars continue to come up. Student loan raises inflation and budget risk, Wall Street Journal. Yeah, that's one of the things that it was speaking about in the morning. I don't think, like, I thought the inflation bill and other stuff is gonna hit harder, but some people are saying that you can get up to 2% of inflation because of the college loans. Bond and Divergent. Okay, 41.34 on the SPX. Market's kind of holding here. We're not really still 7 minutes to the next hour. So as the day goes on, the move will start to build out. Okay. You know, it kind of, this is where it kind of proves itself, you know. It doesn't really matter, you know, what your strategy is. If you can't appreciate buying and holding and receiving a dividend, those small compound gains in this market, that, you know, that basically it's gonna explain your equity curve. Right. And this is why, like, you know, even Warren Buffett be like, you know, stay away from high yields and, you know, understand the power of compounding gains. You know, why would you give a higher dividend yield if you could reinvest that money back into the business? But this is where it's like, even if you get a high dividend yield, it could have risks. But if it doesn't, it actually performs in your favor, then the reward is very, very high as well, right? And this is just to help y'all, because we're coming up to the end of August, and next week we're going to be going into September. So now the purchases into the long term, after, you know, a month of sitting on the cash and then deciding what to do with it, now it's time to execute, right? So it's like, you know, even if we select a high yield you know, one that if it actually performs, trust me, we're gonna get rewarded. You know, and that's what people do with high yield credit. It's like you go buy some high yield corporate bond that's super, super high yield. You know, it could be risky, but if it matures, it'll pay off lovely. And it would actually end up you know, the company, if it'll actually end up doing better, and then the corporate bonds can, you know, catch a bid a lot stronger, you know, we'll be able to be golden. So, but what better time than now? What better time than now? So I need your help, family. We need to break this resistance. We need to get in this carefree state of mind. So if you hear my voice right now and you got some knowledge or you found anything you heard so far, seen helpful, please put a fire emoji in the chat. Like, I need your help right now. Like, we can't move this train without you, family. So let's go. Drop your fire emoji in the chat if you got some advice, some help from just being able to hear the information and source the information. We heard from Powell. We got to interpret it before and after and during. And this is like literally like this is though we're seeing, you know, stocks and bonds, but literally if you have any other questions on stocks, bonds, Jerome Powell, questions on any of those things, like just be patient for afterwards and listen. Like, just be patient with us because the information we're providing here, how we're doing it, is like it's just different. No, it's just different. Like, they call them on the morning calls. Nah, it ain't morning call if you can't interpret things live. You see what I'm saying? No, it ain't live if you can't interpret the data live and be able to interpret your losses live. You see what I'm saying? This is it's live. We're trading with real money. We're trading with real knowledge. We're trading with real insight. We're not saying we bought this because it got to 67 and it was at the support level. No. We know the company's moat. We know what the company's finances are. We know where the company's directed. We understand where we're directed. We know where our goals is at. You see what I'm saying? There's no confusion in us. You see what I'm saying? There's no, and this is where I'm not trying to get you to repent. I'm not trying to get you to, but I'm trying to have you understand that success leaves clues. Okay, success leaves clues. So if you hear my voice right now, family, drop a fire emoji in the chat. All my cousins in the back, all my family in the front. Let's go, baby. Let's get a hype train. If you don't got the fire emoji, it's okay. Copy and paste from your brother and sister. Let's go. You're in the right place at the right time. I just need to see who's going to hear this and who's going to get hype off of this, because this right here is going to help a lot of people. It's really good. This one here, nah, you're living in a world where you see a lot of things happening, and there's a lot in the stock market right now, and we have this moment. Understand, it's time, it's knowledge right now. We have this moment. You hear me? And this is where I want to be able to put you guys in the right mindset, even after today, right? This was well expected, you know, but everything else, no matter what happens from here, you need to know how to move forward and how to control yourself mentally and physically in the game. I'm telling you. So let's go. Drop the fire emoji if you ready, because I'm ready. I promise you, this is right here is a skill. It's a skill. It's a skill. You think nah, those charts not gonna give you confidence like this. It's a skill. I'm telling you, this is gonna actually give you a dividend in the long run. Yeah. And in the long run, this is gonna provide a dividend. So let's run it. Let's run it. So I want to start with expectations. I want to start with expect zero. Yeah, I'm gonna give it to you straight out before I give it to you. Expect zero. What do I mean by that? What is expect zero? Expectations is your gas tank. Expectations is your gas tank. And how do you handle them? How do you handle your expectations? Well, let me know how you handle your gas. I say this again, expectations is your gas tank. Your job as a trader is to go from point A to point B, start point, end point. Start point, end point. But your expectations from A to B, it's all in your gas tank. And today I want to give you a little tip. And I just want you to understand things. Okay, when you're dealing with expectations and like something happens and you expect something, there's always going to be a reaction. How you react and how you let that make you react That's gonna tell your ultimate outcome. The pattern could look the same. It could be the same person. Yeah, it could be the same person you've been beefing with for the last 2 years. But how you react is going to determine the ultimate outcome. And we could get into the whole stoicism. And I know we talked about that before, but I want you to understand a little bit of how our brain and our mind operates. And this is giving you an intro into the mindset of the trader. So this is something that I want you to understand. You see, this is where, let me ask you this. Has there ever been something you wanted to not think about? Like, have you never wanted to look at your portfolio? You're like, I don't want to think about this person. I don't want to think about this happening. I don't want to think about all this stuff. Procrastination. I don't want to think about that all the time, right? I could have done better. I should have done this. This led me to that. Come on. You know what I'm talking about? Am I the only one? Let me know, family. Let me know. And this is why I think this is important. Because this is why I'm saying, like, I hope this can really help you if you can stay to the end. Because this helped me with a big problem. And this is why it happens with a lot of people are like, well, you know, just don't think about it. Stock baby, I'm just not gonna think about it. I'm going to wait for the weekend. And I'm like, well, they're like, oh, I'm just not gonna do this, stock. That's it. And then, like, you know, I'm like, I get it. That's reasonable, but that's not rational. Like, your mind don't work like that. You know what I'm saying? Like, you can't, like you put something in your mind, it becomes energy. And we spoke about these degrees of energy briefly in the morning. You see, you put your energy towards the things you want to do. But if you put your energy towards the things you don't want to think about, oh, I don't want to think about it. But guess what? By saying you want to avoid it, a lot of the time it's still in your mind. You're actually putting more focus and attention into things you don't want. This is why, like, addictions, drinking, smoking, doing those things, sex, I could go down the list. Like, whatever you do, and I'm not judging anyone. I ain't trying to do that, but I'm trying to explain why it's so hard and what's that missing gap in our mind. And I'm sure every single person, I know a lot of people probably try smoking, and you're like, I want to stop. Like, yo, I need to stop. You want to stop smoking, and it's so hard. Why? Because you're thinking about not smoking, and thinking about not smoking and not drinking, that's actually getting you to think about smoking and drinking. Before you know it, you're probably drinking and smoking. Crazy paradox, right? So let me teach you how to break it. Or let me teach you how to handle it at least before you do go. Because you might deal with it in a bigger manner. And I want you to be able to honestly control yourself and control your expectations. And if you can understand this, whoo, it even translates into business. This will help you. But this is one of the things that's going to help you. And I want you to think about these two things. Just simplify it. Addition and multiplication. Addition and multiplication. I know some people ain't good with math. It's cool. You don't have to be. Just listen. Addition and multiplication. You know why I'm not adding, I'm not saying subtracting? And I'm only saying addition and multiplication? Because you can't do that. That's what I'm saying. You try to put something in your mind and you say, I want to subtract this. I want to get this off my mind. I want to subtract the brain. Nah, it doesn't work like that. You brought something into your brain and the brain does not have the ability to take something it brought in and throw it out. It's not like the body. That doesn't happen. That's why you have a memory. That's why you have dreams. That's why you have your subconscious. And the things you add to your brain, you cannot subtract from it. Why do you think all our ancestors and our grandmothers and our mothers always would say, "What? Hey, watch what you watching." Oh, you don't feel me. This is what our parents was telling us, but we didn't understand it. My grandfather's, hey, watch what you watch. What do you mean? It's not because when you see something it's not leaving. I hate to break it to you, but something comes in, it's not leaving. There's no such thing as subtraction. Once it gets in there, that's it. Watch out for your influences is right. But the whole point is that there is only addition and multiplication. That's it. So how you deal with your expectations, when your expectations don't match up, when you're thinking about something you don't want to think about, what do? Well, you already know. Multiplication now. Because you're trying to stop focusing on something and stop focusing on the expectation you didn't achieve. Like you did something, but it wasn't what you expected. And you're trying to focus, but you're not focused. Guess what happens? It multiplies in your head. Am I the only one? Your head gets filled up with things and it multiplies. And then if you try to subtract it, you actually end up multiplying it again. And that's why some people struggle with this a lot. I mean, this is huge. I'm trying to stop these things, but I can only keep thinking about it. And that's the multiplication right there. That's part of it, though. You know, the multiplication with the other part is addition. And if you really want to be able to understand things, this is going to be on you if you could separate. And like, this is what, you know, Epictetus say. He said, you know, separate yourself from thought and your emotion. He said, some people think before they emote. And then some people have emotions before they think. And that's why it's talking about this. And that's why they say if someone says something to you and angers you before responding, like maybe you need to think about it. Because before letting the emotions get at you, you may want to go about it a certain way. So the idea is to separate. And then we have to add in. You need to add in new information. Type add in to the chat. Type add in to the chat. You need to add in new information. So in other words, whatever that thing is you're dealing with right now, you have to find a way to look at it in a different way and separate yourself from it. But then you need to, I need to add in information to take it, you know, how you see it. Oh, okay. Like, I need to review it and add more information. And like Epictetus said, he says to you, if someone come up to you and says you're a bitch, bro, you're broke, you ain't doing nothing with your life. Well, if someone said that to you, Epictetus would say, well, is that true, sir? And no, if it's not, why would you let it bother you? And again, if someone would say negative things about you, if they really knew you, wouldn't they say more negative things? And that's why I always tell people, you know, I've been made fun of multiple trades, right? On losses, you know, I've been made fun of people on internet, right? It's like, oh, you know, and it's crazy. And this is like, you're clowning me for being down or being wrong. I can take that, but like, why would you react negatively? You know, the whole point is like, if you can separate yourself and view it as is and add information, you know, why would you do that? I said literally, you know, add information and understandings. And again, if I wouldn't take advice from you, why would I take criticism from you? So please don't get hung up on this, because that's not the point I'm trying to give you. The example of adding new information and taking things as you see it. Do you feel me on that, family? Some of y'all, whatever you're going through, like let's say you're going through something money-wise, and I've seen people lately, like they've been freaking out about that. And like, and you're like, oh, I just want to YOLO it all. You need to step back. You're not thinking properly. If you're just like, I want to go, I want to do this, oh, stock, I'm just about to YOLO it all, you're not thinking properly. I feel you, but guess what? You got a little bit of thinking going on. You got a little bit of motion going on. Can you take a step back and separate the two? Great. Now, after you separate the two, can you add in more information? So this doesn't mess up our line of thinking and messes with our expectations and then messes with our life. It's very simple. And this is what I'm saying. Look at your situation, ask yourself, okay, like all I want to do, all of those things, like, do you really have no options? No, what you really got to give yourself is information. The very thing you're lacking is adding new information to the story. And this is what I'm saying, because that's the only way you're going to handle this thing of yours called your brain. Otherwise, the problem is going to multiply, and literally you're going to add new information of the wrong thing. And understand, well, this is just the beginning. You know, I got a lot more work to do. This is a blip. You know, I think the best one right here, right now, this is the worst stock market in 50 years. I see people questioning a lot of things. And then they're looking like, oh my gosh, I can't believe I wanted to save. I thought, no. I get that. I get the thoughts, emotions. There's a lot going on. But maybe you make some good decisions. Maybe you make some bad ones, you know, but take a step back. And that is a piece of information that can be added. So like, yo, actually, this is a moment where things are, you know, really going bad and, you know, really that bad, or has the environment reached a point where it's actually getting awful? Again, quite simply, you could add that as new information and say it's not that bad. Like, if you really look at the reality of situation, I've seen 18-year-olds, 19-year-olds, 21-year-olds, you know, 25-year-olds, 30-year-olds, 40-year-olds, legitimately with much time left on the clock. Legitimately, you face one or two setbacks and you think that's the worst thing in the world. Especially people like in their 40s, 50s, like, you got to learn how to separate those thoughts and emotions. You need to add information, new information. Otherwise, think about what you're telling your children that's 19, 20, 21. Those thoughts are also multiplying in their head that, oh, I can never do it. It's awful. My situation is bad. It's never going to be able to do anything. Like, literally, instead of taking a step back, separating and realizing, okay, maybe I did trip. Like, yo, I can't acknowledge I slipped, bro. I slipped, you know what I'm saying? But hopefully you could do the same. But maybe instead of, you know, of sitting there like, yo, I slipped, it's all bad, you know, I would have did this. I did do good in this area. I didn't do bad, but I could have done better. You know, this wasn't good, but when it's all said and done, it's not the worst thing that could have happened, right? So I know this is very cliche. You heard it before, but again, this is adding new information. I honestly, SPX can do whatever right now. We're in position, but we need to add new information. And this is where this helps you control your expectations, and this helps you control what your mind is on. This is what's making you react emotionally. This is what's making you put your thoughts ahead, and it's super simple: addition and multiplication. Whatever anxiety, fear you're dealing with, whatever's going through your head, you're either going to add more information so you can handle it and understand with a good degree separation, not too much emotion, and not too little thinking. Or it's going to multiply. So understand, addition or multiplication. The choice is yours, family. But I hope this helps, and I hope you take it to the bank. That is your philo, ladies and gentlemen. Add that to your toolbox. Carry it with you on a journey. Take it to you on the walk away. Remember, this is a journey, baby. Run it up, run it to the bank. We're live Monday and Friday on the Freedom Train. You know the deal. Don't be shy to show love. We accept all love. Tough love is still love. We love you, baby. Follow me at The Stock Baby. No dots, no underscores, no zeros, just The Stock Baby. And the Stock Baby Library is a wealth of information for all traders. 0 day to expiration, baby. So understand, live trading is free every Friday, but if you're not a member of the Stock Baby Mentorship, you may be on the station right now, but you're missing the train. Understand that, baby. You're missing the train. Like literally, we're hitting play after play after play. Like literally, I'm back off hiatus and it's up now. Remember, the only way out the mud is what? Is up. The Options University, only 20 spots left. I mean, the what you receive, what you're going to receive and how you will start to perceive is going to be priceless. Understand, we trade in consistency and we trade in admirably results, okay? So we had an amazing week. Time to double the output, okay? It's amazing what we're building, the foundation, the members. I mean, at this point, like, you choose, ball in your court. We got a couple weeks until we get Powell, okay? We're about to start a new month, Quad, which is right around the corner. We got the GDP. We're going to get more manufacturing data. We got the earnings. We got to hear from Chips. And today we got the PCE. And we also got Jackson Hole. So this is the last time we're going to hear from Powell before we hear from the interest rate decision. And we got non-farm payrolls next week. So I hope you're ready to ride it out. But it's the day, ladies and gentlemen. I hope you have a wonderful weekend. I hope everyone has some fun. Ladies and gentlemen, you know, someone asked, can they do something for me? Please pray for me. Please pray for Aki. Please pray for each other. Pray for your brother and sister, and just be prepared and never have doubt in your long term. Understand, your future self is staring at you, baby. So don't F it up. Get ready. Be nimble. Be excited about it, and just get ready in the next few months as we as the summer develops. It's gonna be very, very interesting. So I hope you're ready. I love you, and get ready for the year end, baby. It's game time. It's been a real pleasure being here with you folks, and I love you. Amor Fati, and God bless you all.